behaving this morning. We'll just let it sit at that. Good morning, 105.7 Highlands Light FM. I named my computer Hal because he's got a mind of his own, just like 2001: A Space Odyssey. Let's see what's going on Wall Street, shall we?
Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
Well, now that we got the train back on the rails, let's check in on money and see what's going on Wall Street this morning with Philip Statler from Statler Financial Services in downtown Sebring. Philip, are you on the rails this morning? I sure as
Hey,
heck are.
I'm here. I was trying to figure out what buttons you were pushing, and but I'm here.
It's a function of fat fingers from the disc jockey more than anything else. We are here this morning talking money and what goes on. Yesterday, it was generally it was a red day on Wall Street. Dow lost 0.5%, a little more than that, down 280. Standard & Poor's down by 0.04%, $2.85. NASDAQ actually pulled out a gain, up 9, and that might have been a little preamble to the flood of big tech earnings that we got at the end of the day, right?
Exactly. So we had a bunch of tech report after the market closed yesterday, and for the most part, what I'm seeing, at least so far, is mostly good news, Dave.
Yeah, I was going to say the performance sounded good, and we had kind of the usual reaction from investors about stop spending so dang much money on CapEx, which you and I were kind of sort of preambling yesterday, and that was pretty much a predictable reaction on a couple of them, wasn't it?
It was. As we kind of look through those, they are definitely, we'll talk about them in a little bit, but definitely the Magnificent Seven seem to be living up to their name for the most part.
Absolutely. Gobs of money is the simple reaction, I think. We got the biggest government data dump of the week all on one day today. The fabled PCE inflation rate came in. Month over month top line, it was about what was expected, but what was expected was crummy. 0.7% top line PCE expenditure, which I guess with the price of energy going up, not a big surprise. But once you pull the variable stuff out and go to just the core PCE inflation rate, yeah, it was expected, but still 3.2% inflation on the measure that the Federal Reserve uses as their reference point for whether or not they ought to raise or lower interest rates on a month-to-month basis. Doing what we expected is okay, but number one up and number two over 3%, great googly moogly. I'm not a happy camper with that.
No, that's definitely going the wrong direction. That's up from the 3% that it was last time we got a reading on it. And so now we're at 3.2. Definitely, Dave, going the wrong direction. You got to think it's going to be tough for the Fed to lower interest rates, given what we're seeing on the inflation front.
And because it's a new Fed chair who's kind of made noise about how he thinks an interest rate reduction would be a good idea, he's going to have some dissents, kind of like Jay Powell did yesterday at their Federal Reserve meeting, didn't he?
Yeah, he did, and I find it interesting that Jay's going to stay around. I think he did it just in spite.
Exactly. He kind of implied that I'm just doing it because I'm hacked off at the president, so I'm going to hang around it. I was waiting for something like that to happen on his press conference afterwards, and he came about as close to saying, I'm going to stick it in this guy's eye and hang around for a little while longer.
Yeah, I did find that interesting because I think he's probably the only one that's ever done that, isn't he?
That was what I was reading. If it's happened before, it's we're talking 50, 60 years in the past when somebody leaves the president of the chairmanship and then sticks around as just a voting member of the board. It's going to be kind of interesting. I don't know whether does he rotate back onto the open market committee too. I'm not sure of that.
I'm not sure. I'm thinking so, but I don't know for sure. I know his term's not up until 2028. So.
Yeah, his dissents could be really interesting if he does what the other governors are doing. But it wasn't all bad news on the government data dump. I mean, we are keeping pace anyway on income. They were expecting our personal income to go up by 0.3%. We ended up getting a 0.6% average raise in personal income over the last month. So that's an improvement. And the number of unemployment claims is almost to the point of boom time, inordinately low. Only 189,000 first-time unemployment claims. And that's almost that almost borders on scary low, because nobody's leaving their jobs and nobody's getting fired for the moment.
Yeah, and let's look at the other side of income, spending. We didn't talk about that before we went on the air, but spending up 0.9%. So we're spending more than our income's increasing. That was as expected, but still, that is a pretty extreme high number. It was only up 0.6% in February. So, yeah, that's on track for a pretty big increase.
Meaning we're burning plastic, and kind of saw some of that alluded to when we got the consumer-oriented banks when they reported their quarterly reports earlier this earnings season. Talking about those quarterly reports, and I'm just kind of looking at the curve from yesterday on the charts. They weren't overly unhappy with Powell's press conference, but we kind of drifted downward all day as it became obvious that we weren't going to see any really hot button news. Then at the close, the Magnificent Seven kind of flooded the gates with four big ones in the process. And like we were alluding to earlier, investors don't like capital expenditures. Alphabet might have been the exception on that. I gather they had a halfway decent report, huh?
Well, Alphabet did. Remember, that's the parent company of Google and YouTube and that company. And they had a really, really good quarter. They revenue was over $2 billion more than expected. And the big winner was their cloud revenue from cloud computing. Revenue surged 63% from what it was before. And like you talked about, CapEx is definitely one of the things that everybody's talking about. And they did raise their 2026 CapEx expectation to about $190 billion. That's significant. And then they're talking about on top of that, a significantly bigger increase in 2027. So all that said, they're still trading up a little over 7% this morning.
Imagine what they'd do if they were cheapskates, huh?
Exactly. Yeah. I will say what's that?
I was going to say, give me another story from big tech, but you had some other local color on Alphabet?
Well, no. I was going to go on to Microsoft. I don't have a lot of the details for Microsoft, other than they beat on revenue and earnings, and they saw their revenue from Azure and other cloud services increased by 40%. But there must be something in their report dealing with CapEx, because they've gone from positive to negative this morning, down about 0.9% before we get trading today. The other two that came in, Dave, were Amazon and Meta. So let's kind of do the better news before we get to the not so better news. Amazon had a good first quarter. I'm gonna say they had an impressive first quarter. They beat on earnings by over $1 a share, came in at $2.78 a share. Revenue beat by probably call it $4 billion in revenue. Their guidance was good, came in as expected, except for capital expenditure slightly higher than expected for this last quarter. And so they are trading up 3.75% this morning.
That's good to hear, because in pre-market, I know they were down a little bit earlier this morning. Evidently, some of the investors have had second thoughts on that, huh?
I guess so. And then we look at Meta, Facebook's parent company. They're on the losing end of the stick today. Now, they did beat, don't get me wrong, they beat on earnings and revenue. That all came in as expected. Nothing bad there. Again, it's CapEx spending. They hiked their full year expenditure guidance to somewhere between 125 billion and 145 billion. Um, and they're afraid most of that's going to go to AI spending. And so that has Meta trading down 8.1% this morning.
Good heavens. You know, every time I log on to Facebook and I'm searching for somebody and getting routed to their whatever they call their chatbot saying, well, why don't we help you look for this? No, I'm looking for a person. Leave me alone.
They want to sell you
They
something,
haven't.
man. They want to sell you something.
Yeah, they haven't. Yeah, they haven't gotten to the point of being friendly yet. We got a busy day today, and tomorrow morning, I would guarantee you we're going to be talking about companies like Apple. They're going to be reporting today, and that's going to pretty well wipe out the Magnificent Seven until NVIDIA gets around to doing their report in a couple of weeks, I'd wager.
Yeah, and let's talk just a few seconds about interest rates because I checked those today. We haven't talked about them much lately. The 30-year is touching on 5%, 4.98% right now. That's got to start putting some pressure on mortgages again.
Because I know the mortgage rates went up a little again last week. So yeah, it's we're the money's getting tight as we spend more of it on things like war machines and the like, don't we?
Yeah, exactly.
And resetting the table, generally a flat day on Wall Street yesterday, although the techs benefited and the blue chips fell. 45 minutes before we open this morning, what are we looking at so far?
Dave, if we can open where we are to right now, it could be a good last day of April. We got the Dow up a little over 0.6%. The S&P 500 is up a little over 0.5%. The NASDAQ 100 is up 0.75%. Russell's up just a tad. So good on all those fronts. Silver's up 2.5%. Gold's up 1.8%. Crude oil, man, it closed at a crazy high number yesterday, over 107. It's at 105.50, call it right now, down 1.3%.
I'm honestly surprised to see the futures pointing up with $107 oil for a little while overnight. Sometimes we can't explain stuff. One thing I can't explain, it seems to happen all the time. Asia follows our yesterday and Europe follows our futures. Asian rim markets generally down overnight. The two mainland Chinese markets ended up averaging out to just about dead flat. Everything else was slightly in the red. European markets, on the other hand, looking at our futures and saying, well, maybe they got their act together after all. The average European market up by just about a full percent halfway through their trading day. Over on that side of the pond, the Brent oil price of $115 a barrel notwithstanding, they're happy looking at us. Getting my retirement together is going to take a plan, and if I don't have one, I could be in deep doo-doo. How do I get a plan to make my retirement work for me, sir?
Dave, a plan is what really makes retirement work. Give us a call at 863-382-0037 to schedule your core retirement analysis. We'll spend 30 minutes to make sure you're on the right path to the retirement you always dreamed of. And then catch the Statler Financial Radio Show this weekend, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m., 95.3 FM.
And back here again together tomorrow morning about the same time. I appreciate it, and I'll try to keep my buttons working properly tomorrow. Fair enough?
All right, fair enough, buddy. Catch you then.
Thank you. It's 105.7 Light FM and Statler Financial Services. Philip Statler.
Hey, folks, again, I want to thank you for joining us. Hope you have a great day. I look forward to speaking to you again tomorrow. Take care. Until then, have a great day. Bye now.